I'm going to introduce you to moving averages. Um, I primarily use moving averages just to identify the trend because at times we can get stuck into channels and consolidation and ranging markets, and it just helps you identify when the trend is starting to take off. It can just assist in actually getting into positions and helping measuring risk accordingly, and it's quite a useful tool. The one I use predominantly is the 20-day moving average. So what I'll do is I'll actually show you how to set it up. You go into insert, you will go then down to indicators, and then you'll go to trend, and then you will click moving average. Okay, so this is using MetaTrader 4, but most platforms will be very similar. So I use the exponential, and then I use the 20 period, so the 20-day moving average, and then you can add it to whichever time frames. I use it really on daily, but I just put it on all time frames anyway, so it's really only used on daily channels, daily time frame. Then I'll press OK and I'll bring it up. It's already up on the chart, but I'm just showing you. And then I'll add the 10-day moving average. So then you put 10 exponential, apply it to the close, whichever color you like. Okay, done. Now let's go to daily. Okay, so here we go. Alright, so let's just go to the most recent price action. Hold on, I'll just delete that. Alright, so now what we do here is let's identify exactly what the moving average does. So see how we have here, when the moving average comes down, it starts to flatten out when we get this consolidation that was happening for a few weeks. Well, it's daily, but obviously it's clearly happened for over a month. This consolidation has just got trapped in a particular price range. And then what's happened is it's just shot through that 20-day moving average right here. Okay, and it's just come straight down there very aggressively and just sold off. Now what I use here is I look to see when this 10-day moving average crosses through the 20-day, because it indicates to me that, you know, there's a possibility. And you need to keep in mind, like, I don't want to neglect that long-term fundamentals are playing in the background, which is pillar 1. Okay, so at the 5-pillar approach, we always look back to that pillar 1 for that long-term fundamental. So if I'm looking to trade this, I'm looking for Aussie weakness. So I'm going back, I'm analyzing data points, central bank statements, which is, you know, the RBA for, in regards to Australia, and I'm looking for those statements telling me that they're, you know, that there's a reason for me to believe that the Aussie will be experiencing weakness. And obviously this is against the Singapore dollar, so then I'll look for either inflation or the, you know, CPI, or I'll be looking at economic indicators to give me an indication that I do believe that Aussie will end up in the long term weaker than the Singapore dollar in this particular pair if I were to trade it. So what's happened here is, see how we've started to get a little bit whippy around here. So like I said, it's just shown me, it just shows me and indicates, like, what would have happened here is this moving average just indicates that we're starting to come down here. But I use it in conjunction with other tools, but I'm just pointing out exactly how it works, and I'm going to refer to it in other videos so you can see exactly how it can be applied and how it can be a powerful tool.